Are you looking at making a home purchase and you're just not sure which loan program is available? Well, today we're breaking down the two main sources, which is FHA versus conventional. If you think this fits in your wheelhouse of loans for your strategies going into the new year, making that home purchase, you're not going to want to miss this. Stay tuned. Hey, welcome back. Again, it's Glenda White here at Very Mortgage, the Mortgage Coach DFW. We're talking all things real estate, mortgage, and really just getting to know Dallas-Fort Worth, Texas. So jump on in. We would love to have you. If you think this is of educational value or you just like our channel, hey, go ahead and subscribe down below. And don't forget to hit that button above. That's right. Let's hit the bell and make sure you're available for our next video whenever it comes. Let's just jump into it. Number one on our list is down payment. Yes, that's right. So here's a really cool thing is FHA does require a minimum down payment of 3.5%. But what a lot of people do not realize is on a conventional financing, you do not have to put 20% down. That's right. You do not have to put that 20% down. There's a couple of reasons why. Is because now there are loan options as little as 3%. Which on a $300,000 loan, that is $1,500 difference to get you into a conventional financing. So that's pretty cool when you think about the loan options out there. Conventional has first-time homebuyer 3% loans. You can do 5%. Of course, the more money you put down on conventional, the less your payment's going to be and the less the mortgage insurance is going to be. But we'll check that out later in the video. Next up on our list, we're talking about credit scores. That's always a big question too, is, oh my gosh, I don't have this credit score. Well, here we go. Another myth. You can buy an FHA home with as little as a credit score as 580. Yeah, that's right. 580 with your required 3.5% down. Now, remember, on conventional financing, just because you meet that 620 credit score doesn't mean necessarily you will be approved for the loan. Most likely you need compensating factors, which is longevity on a job, verification of rent, and how much money do you have to be able to put down. Otherwise, it's a great option to look at FHA if you're between 580 and even a 640 credit score, but conventional, you can adopt a 620 credit score or higher. How much debt do you have? Oh my goodness. So here's a really good question too on the differences between FHA and conventional. FHA allows you to go to 55%. That's right. A 55% debt to income ratio. Now remember, your debt ratio is your pre-tax earning divided by your debts. Student loans, installment car loans, child support payments, any kind of revolving debt that you may have. We have to take those plus your new principal and interest, taxes and insurance. So that's your fully amortized mortgage payment, and then divide by your pre-tax earnings. On FHA, we have to keep it under 55%. Now, conventional is a little bit more restrictive on that. They really like to see you under 50%, but that sweet spot is still 43% of your pre-tax earnings for a debt to income ratio. Mortgage insurance, here we go. This is always the kicker. This is where your payment can change anywhere between $50 and $100 a month. So listen up on this one and mark it down on your playbook. On FHA, it is set by your loan amount and not on your credit score. That's right. So your premium costs the same no matter what your credit score is. Now, on conventional financing, it is based upon your credit score and how much money are you putting down. The lower the credit score, the higher the mortgage insurance. The higher the down payment, the higher the credit score, the lower the mortgage insurance is. So be very wary whenever you're looking at those strategies between conventional FHA. This could be a huge difference on your monthly payment that could change your approval amount anywhere between a couple thousand and $20,000 or $30,000. So again, we're looking at debt to income ratio, we're looking at your credit scores, and that crazy mortgage insurance premium. Now, side note, on FHA, you're required to carry mortgage insurance for the life of the loan. So that pesky mortgage insurance never, ever goes away, except if you put 10% down or if you refinance. So over the last year, a couple of my clients, actually a lot of my clients, have been able to start their loan FHA and we have refinanced them into conventional because of the appreciation that's going on. Now, that's a caveat because there's not anything to say this appreciation is going to continue here in the state of Texas for the years and years and years, but it's really a good loan option to minimize your out-of-pocket expenses and to get into the home to where we can refinance you in a year down the road into a conventional financing. It's all about strategy, right? And coming at number 5 of the list is loan limits. Now, both conventional and FHA set a ceiling amount for what a borrower can maximum finance. But on conventional, you can look at a jumbo loan. But remember, when you start looking at jumbo loan financing or even VA loan, jumbo loan financing, the rates are going to start changing because now the risk level is changing. Based upon Ellis County today, FHA is set at $411,700. And on conventional, it's $548,250. And again, these are based from regulators. HUD sets FHA, and FHFA, which is a Federal Housing Finance Agency, sets those conventional loan limits. That is not set by any lender by any means. Let's talk about appraisals and property standards. Now, FHA, because again, it's backed by the government, it's backed by HUD, the Housing of Urban Development, they want your home to be structurally sound. So they're going to be a little bit more picky, is a good word, on what your home looks like. And when we say picky, is we're talking maybe wood rot and paint chips could be an issue, versus on conventional where it's a little bit more lenient on what you could get away with. Maybe a building out back or a shed out back. So check with the lenders. Give us a call if you ever have any questions of a secondary or third property on there. Or if there's something you just don't see right, that you could see it may or may not go FHA or conventional. To sum it up from what we've looked at today, let's kind of break it down. And if you think, again, this is something your strategies are looking at or ever have any questions, make sure you save the link or send it to your real estate agent that you're looking at so you really can compare and be an educated buyer on which property type is best for you. On conventional financing, we do require a little bit higher credit scores. They allow a slightly smaller and really similar down payment, especially if you're a first-time home buyer. They have a little bit more liberal property standards. And although you're not putting 20% down, they're going to require that mortgage insurance that we spoke about. But great job is when you get to 20% equity in the property, your insurance may be canceled. Now, on the flip turn on FHA loans, they do allow a little bit lower credit scores. They do require a little bit higher down payments. Now, again, that's 3.5% is the minimum. If you hit to 10% of the down payment, that mortgage insurance can be canceled after 10 years. Otherwise, that mortgage insurance is mandatory. And they do have a little bit stricter property standards as well. Thanks for joining us today for this week's edition of FHA versus Conventional. We hope you guys really enjoyed it today. If you think this is a really great conversation to have, give us a call, book your mortgage consultation below, or you can always get a hold of us at themortgagecoachdfw.com. Until then, many blessings.